Learn capital in capitalism. Make money work for me. Assets is the happiness of our family. Important points. Most of the time, high point and low point are 2 points that a trader considers as relevant, and Fibonacci retracement levels connect these 2 points. The percentage levels are given where price may become stall or reverse. 23.6%, 38.2%, 50%, 61.8%, and 78.6% are most commonly used ratios. It might be harmful to assume that the price will reverse after hitting a specific Fibonacci level because levels should not be relied on exclusively. The formula used for levels. Technically, there are no formulas for the Fibonacci retracements, so traders select 2 points to apply them on a chart. Lines are drawn at percentages of that move after choosing the 2 points. Assume the value ascends from $10 to $15, and these 2 value levels are the focuses used to draw the retracement indicators. At that point, the 23.6 level will be at 13.82. $15 minus $5.0.236 equals to $13.82. The half level will be at $12.50. $15 minus $5 times 0.5 equals $12.50. How to calculate Fibonacci retracement levels? As examined above, there isn't anything concrete with regards to Fibonacci retracement levels. They're basically rates of whatever value range is picked. Notwithstanding the source of the Fibonacci numbers in interesting. They depend on something many refer as the golden ratio. Start a grouping of numbers with 0 and 1. At that point, continue adding the earlier 2 numbers to get a number string this way. 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, 144, 233, 377, 610, 987. The Fibonacci retracement levels are completely gotten from this number string. After the grouping gets moving, separating one number by the following number yields 0.618 or 61.8%. Gap a number consistently number to one side, and the outcome is 0.382 or 38.2%. All the proportions aside, half, since it's anything but an authority, Fibonacci number, depending on some numerical count, including this number string. Strangely, the golden ratio of 0.618 or 1.618 is found in sunflowers, universe developments, shells, recorded antiques, and design. What do Fibonacci retracement levels tell you? Fibonacci retracements can be utilized to submit section requests, decide stop misfortune levels, or set value targets. For instance, a merchant may see a stock moving higher. After a climb, it follows to the 61.8% level. At that point, it begins to go up once more. Since the ricochet happened at the Fibonacci level during an upswing, the merchant chooses to purchase. The merchant may set a stop misfortune at the 61.8% level, as a return underneath that level could demonstrate that the assembled has fizzled. Fibonacci levels additionally emerge in alternate manners inside the specialized examination. For instance, they are commonly in Gartley examples and the Elliott wave hypotheses. After a critical value development up or down, these types of specialized examination find that inversions will, in general, happen near certain Fibonacci levels. Fibonacci retracement levels are static costs that don't change, in contrast to moving midpoints. The static idea of the value levels takes into account snappy and simple distinguishing proof. That underpins dealers and financial specialists to foresee and respond wisely when the value levels are tried. These levels are expression focuses where some sort of value activity is normal, either an inversion or a break. The difference between Fibonacci retracements and Fibonacci extensions. While Fibonacci retracements apply rates to a pullback, Fibonacci augmentations apply rates to a move the moving way. For instance, a stock goes from $5 to $10 and afterward back to $7.50. The move from $10 to $7.50 is a retracement. On the off chance, the value begins energizing again and goes to $16. That is an expansion. Limitations of Fibonacci retracement levels. While the retracement levels show where the cost may discover backing or obstruction, there are no confirmations the cost will really stop there. This is the reason other affirmation signals are regularly utilized. For example, the value beginning to bob off the level. The other contention against Fibonacci retracement levels is that there are so a large number of them that the cost is probably going to turn around almost one of them regularly. The issue is that traders battle to know which one will be helpful at a specific time. At the point when it doesn't work out, it can generally be guaranteed that the broker ought to have been taking a gander at another Fibonacci retracement level, all things considered. Fibonacci and the golden ratio. You can use the ratios to describe the ratios of everything in this universe. You can find the ratio of the smallest natural things like atoms and unimaginably large things like celestial bodies in the universe. You can easily witness that the universe sustains on the basis of these ratios, and the same goes for the financial markets across the globe. You can easily find such golden ratios in the financial markets. We will have a look over the different technical analysis tools which are developed to take the benefit out of the patterns. Doubtlessly, mathematicians and scientists are familiar with golden ratios for centuries, and they are extracted from the Fibonacci sequence as we already discussed. Important points to keep in mind. You can easily predict the patterns from small atoms to the celestial levels with the help of golden ratios. Basically, these ratios are extracted from the Fibonacci sequence, which is named after Italian founder Leonardo Fibonacci. Same like nature, financial markets use these ratios to maintain the balance into the markets. There are three main tools for Fibonacci application of the market, which are arcs, fans, time, and zones. This thing is to keep in mind that this sequence is not as useful as it should be, especially without the compulsory part of the quotient of all the adjacent numbers with the amazing proportions. Generally, 1.618 or its opposite 0.618, this extent is known by numerous names: the brilliant proportion, the brilliant mean, PHI, and the awesome extent, among others. All in all, for what reason is this number so significant? All things considered, nearly everything has dimensional properties that cling to the proportion of 1.618. So it appears to have an essential capacity for the structure squares of nature. Try not to trust it. Take bumblebees, for instance. In the event that you partition the female honeybees by the male honeybees in the same random hive, you will get 1.618. Sunflowers, which have restricting twistings of seeds, have a 1.618 proportion between the widths of every pivot. This equivalent proportion can be found seeing someone between various parts all through nature. Does it true that you are as yet experiencing difficulty trusting it? Need something that is effectively estimated? Have a go at estimating from your shoulder to your fingertips, and afterward partition this number by the length from your elbow to your fingertips. Or then again, have a go at estimating from your head to your feet, and separation that by the length from your tummy catch to your feet. Are the outcomes the equivalent? Some place in the territory of 1.618. The brilliant proportion is apparently unavoidable. However, does that mean it works in money? As a matter of fact, monetary business sectors have exactly the same numerical base as these regular marvels. Beneath, we look at certain manners by which the brilliant proportion can be applied to fund, and we'll show a few diagrams as verification. The Fibonacci studies and finance. At the point when utilized in the specialized